Welcome back to the Patrick Lane Show. Thanks for checking us out today, and do me a favor, before we get started, hit the like button, smash the like button, hit the subscribe button, ring the notification, all of that stuff. You know, you've heard it before, and we're trying to grow the channel. It really helps the YouTube algorithm. We really appreciate it. So today, as you know, on the Patrick Lane Show, we always talk about personal finance, investing, and real estate. Today, we're going to talk about what happened to Lucid Motors. It crashed and burned on its first day on the market, which is just crazy. And so, you know, over the last few weeks, months, even really going back to early January, there's been this rumor out there that Lucid Motors, which is an electric vehicle manufacturer, which bills itself as being the luxury version of electric cars. And so they're going to try to compete with the BMWs, the Mercedes, the Rolls, and all of the upper echelon of cars, except their spin on it is that they're going to be electric. So the rumor has been around that the Lucid car company was going to go public via a SPAC merger with a SPAC that is called Churchill Capital 4, or CCIV, as it trades on the stock exchange. Now, a SPAC, for those of you who don't know, if you don't know, is a special purpose acquisition company. And they're sometimes referred to as blank check companies because when the company is formed and started and begins trading, there's really no business there. It is solely set up as a business and traded on an exchange in order to raise money to then go out and purchase and merger with another company that already exists, that other company being a private company. And so the whole idea is that it is going to identify a company which is private and has some product, some service, some amount of sales that they think is really going to be a unicorn and go take off to the moon. And that once they find it, then they merge with that company, and the SPAC actually takes the money that they've received from the SPAC organizers, the SPAC investors, the private investors in the public equity, which is called a PIPE. So the people who are private investors within the SPAC and the equity or the capital that has been raised through the selling of the shares of the SPAC, they take all of that money, they find the company that they're going to merge with or purchase, and then they drop it into that new company, and the private company and the SPAC, which is publicly traded, those two merge together and become one. And typically then the trading symbol will switch over from, you know, whatever the SPAC trading symbol, ticker symbol is, over to something that more closely reflects what the company that was purchased or merged with is doing, or what their name is. So with that as a background as to what a SPAC is, for the last several weeks and months, the rumor has been that Lucid Motors, this new developing hyped up electric vehicle company, a manufacturer that sees itself as the luxury version of Tesla, was going to merge with CCIV. And, you know, there's a lot of great hype about Lucid. They've got their CEO was the lead engineer on the Tesla Model S. They've got 2 or 3 board members who were former Tesla higher ups. They've got some people from the Apple board, or who used to be at Apple, who are now on the Lucid board. They've built a huge manufacturing facility in the United States. And really, even though Tesla is really the company that everybody thinks of as the pioneer of electric vehicles, when Tesla built their factory, they actually bought a factory and retrofitted or converted it to manufacture Tesla products. And so Lucid has come out and said, we are the first people to purpose build a factory in the United States specifically to manufacture electric vehicles. And so there's all this hype surrounding Lucid. And then that caused, the rumor got out that it was going to be CCIV who was going to be the SPAC that merged with Lucid to take it public. And so for the last few weeks, as we know, the CCIV has been going up. It was down at like $15, $14, $13. And then when this rumor came out, sure enough, it started ticking up, ticking up, ticking up. And everybody sort of knew that it was Lucid is what we were really buying into when we bought those shares at $15 and $20 and $25. And then yesterday, it had a high of about $60 when it closed, which is pretty high for a SPAC that has no business, no product, no service, no revenue, nothing. It's just straight, pure speculation. So today, they announced the merger last night late. Finally, the official announcement for the merger. The problem is that when they announced the merger, the value of that deal was way far below what the value of the stock was. So if you think about the stock price was valuing the value of the company at nearly $100 billion, which is crazy. If you think about what Tesla's worth, if you think about what even GM or Ford or some of these other companies that have been around for a long time are worth in the automotive space. And obviously GM and Ford are not the same as Tesla, but Tesla is a direct sort of comparison, maybe not a direct competitor, but a direct comparison. And Tesla's at, 8 or 900 billion. And you've got this company that hasn't put one car on the road yet. Keep that in mind. And they're valuing it yesterday at almost $100 billion. Well, come to find out, the deal that got made was a deal that valued the company far, far, far less than that. It valued it at about 12 or $13 billion. And so what you have is, you had a situation where all of the private investors, so you've got the SPAC organizer, you've got all of the Churchill Capital folks, you've got all of the PIPE participants, that's the private interest in public equity. So all of those people who are behind the scenes and investing privately with the SPAC are looking and watching the stock price. And they see it going up $20, $30, $40, $50, $60 now. And they're saying, we really like this company and we're going to go ahead and buy in. Well, they bought in at the SPAC shares price, which is not $60. It was way back down at $15. So they were buying at $15 per share, while at the same time they're watching their TV screens and they're watching their phone trading accounts, and they're seeing that CCIV is trading at $60. So they're going to make a 4x on their money as soon as they buy a share, because they valued the deal at $15 a share and the market is valuing the deal at $60 a share. Well, inevitably, what happened? When the details came out that the whole deal was only valuing the company at 12 or $13 billion, then all of the retail investors, all of the people who had been buying in because they were excited about Lucid, they were excited about the opportunity for the company, and they wanted to be a part of the ground floor, found out that the people behind the scenes were sort of cheating and rigging the game. And so that caused them to say, nope, I'm out. I'm not going to do it. And what happens today? 9:30, the stop opens up and it drops from $60 down, 60, 50, 40, all the way down to about $30 today at the low. Now it's gone back up a little bit, so it's going to close above that low for the day, but it's way off from what it was yesterday. Now here's the thing. Is Lucid a company that's going to be worth something in the future? That's really what people need to dig into and understand. They're projecting that their sales over the next few years are going to put them back up into that $60, $70, $100 per share range just in the foreseeable future, within the next 5 years. The problem is that Lucid has yet to deliver one car. They've yet to manufacture one car for the consumer. They've got a few show cars floating around out there, prototypes, but they don't have a real car that's rolled off a real manufacturing line that is ready to be sold to a real consumer. And that's a problem for a company that's got a huge valuation. You know, it's valued, again, even at the deal price of $13 billion. That's still a lot for a company that has zero revenue and zero products. So we just have to wait to see. The jury's still out. We don't know what the answer is. But I can tell you, as far as unicorns go, it seems like nearly every SPAC and nearly every electric vehicle manufacturer or electric vehicle company, somebody thinks that those two companies are unicorns, and they're going to drive the price of these SPACs up, and they're going to drive the price of every electric vehicle company up through the sky. So we have to be careful. We have to make sure we do our due diligence as to what the company's offering, what the SPAC's offering, and maybe, just maybe, we'll be able to get in on those early investments too, so that when it runs from $15 or $10 up to $60, that's something we can participate in and not just realize at the end that the people behind the scenes have made the money and we watch it fall like it did, like CCIV did yesterday and today. So that's it. Thanks for watching the video. Hopefully this unicorn will fly again, and we appreciate you watching the video. Do me a favor, smash that like button if you've learned something or been entertained, and we really appreciate you subscribing to the channel. Do me a favor, comment down below. Let me know what you think. Is Lucid a good company? Have SPACs ruined the idea of going public? And what do you think is another unicorn, whether it's a SPAC company, whether it's an electric vehicle company, or just some other unicorn out there that you think is great? It might be GameStop. It might be AMC Theaters. Who knows what it is? But comment down below and let me know what you think is the next unicorn that we need to watch. And we'll see you on the next video.